Hello, this is Ahura, and we'll be with you to review the US inflation data and see the market reactions. As always, let's first check the data and see what we have as a data. Then we can go and see what can be the market reactions to these data. So the core inflation and headline inflation both increased less than, more than previous months, but the core inflation slightly less than expectations. While this market expecting to see 0.3% monthly increase, it increased by 0.2%, twice more than 0.1% that we saw in May. June headline inflation also increased by 0.3%, in line with expectations, and three times more than 0.1% inflation that we saw in May. That means the headline inflation is still increasing, while the underlying inflation with the high levels that currently we are around, it still means that it's still, even thought it's not so bad, so worrying, so concerns, but still we have some concerns there. On the annual scales, the core inflation, which was expected to see the 3% increase in June, increased by 2.9%, slightly less than expectations, but more than 2.8% in May. The headline inflation but increased to 2.7%, up from 2.4% that we have in May, and more than 2.6% expectations. As mentioned, that means the headline inflation and generally the inflation should be still the concerns, and the market uncertainty can increase these concerns. While look at the CPI index, as you can see here, the CPI index for June increased to 322.56 from 321.46. It's a non-seasonable adjustment. The seasonable adjustment also increased to 321.50 from 320.58. Generally, it means that the inflation is still a concern, and we have still thinking about that thought that the core inflation and the headline inflation are not the Fed preferred inflation. But the Fed preferred inflation is PCE price index, but still, sorry. Still, these data could be very important for the market, and the market can understand that inflation, despite some slowing down that we had in the previous months, still should be at the center of the stages, and market should pay attention on that, especially as you know, on June 9, the 90 days pause of inflation, pause of the Mr. Trump's tariffs ended, and now from the August 1st, we're going to have more tariffs if nothing happened. Some surprise, we don't have some surprise. From August 1st, we're going to have more tariffs, and these more tariffs and higher tariffs can increase the inflation again. So, but it's market mover, it was not just the US inflation, it was the earnings reports as well. As you know, the earnings reports started, especially from more seriously from today, with the JP Morgan, Wells Fargo, and Citigroup reports. And all of these banks, they were better than expected and higher than previous quarter, but generally we can say that the market now is more positive about the earnings. I mentioned on the weekly outlook also that for second quarter we are generally expecting positive earnings reports. So with these data now we can say that the Federal Reserve, there is a less chance to cut the rates even in September. As you can see, for June, we are not expecting any, there is no expectations for the rates cut, but for September, if you remember after NFP report, when we were talking, it was about the 73% chance for rates cuts. Now, for the 25% rates cut in for September meeting, now that percentage is slowing down to even less than 60%, which means that the market now expecting higher for longer to continue more, which means that can read as a hawkish data. So with these hawkish somehow data, what we can expect from the market? Let's go and check the chart. That's the US dollar or US dollar index chart. As you can see here, dollar index is positive. We talked about that on weekly outlook. We talked about the 6.50, 96.50 and 98.50 are the data that we can see that dollar index for this week. That's what's happening right now because the higher chance for longer. But at the same time, there are many other things like geopolitical tension that can increase the market risk. and none of them, they are not such too much positive for the US economy, and therefore they are not going to be too much supportive for dollar index as well. Generally, what we can see here that now the less chance for rates cut in September. That means even thought in September, June, when we have a meeting in July, then I guess we will not have a meeting, and then the next meeting will be on September 17, which means that the so it's like more than 2 months here, and that can be higher for much longer. I mean, thought for the September also there is a less chance right now. So that means that we should expect the dollar index slightly higher, at least more than 96.50 or 97. For now, the dollar index is positive. With the positive dollar index at the beginning, we can expect some pressure on the US on the gold against US dollar, as a stronger dollar can put the pressure on the gold. But at the same time, higher yields are negative for gold price, because when there's a yields higher, you'll have a less interest for non-paid yields gold. So which means that the gold demand with the higher yields could be less, but at the same time, the higher inflation and the higher rates means that the stock markets are not going to be to be so much positive about that, which means that again, the downtrend of the gold is not going to continue so long, but generally the gold is positive. For this data is negative for the gold, but as mentioned, the gold overall trend is positive. As for energy market, the higher more expensive dollar index can put the pressure slightly on the oil market, but the general overall geopolitical tensions can still somehow end this price cut, this price fall that we have earlier today. As you know, China's GDP, they missed the expectations, and that can increase slightly the demand for the energy, especially as we know the US also has too much exports here. So the market isn't too much worried about the support, the oil support or supply, which means that it can be negative for the prices. But at the same time, geopolitical tensions can limit the downtrend, and wouldn't be this downward wouldn't be so sharply. The stock market, looking at the stock market generally, S&P 500, Nasdaq, and Dow Jones, all of them generally they are still in an uptrend. The market still is positive about them, but at the same time, the earnings reports also supporting that. But at the same time, we have things too much going on in the currency market, in this economy, and the geopolitical tensions, and all these data they can increase the concerns about the rate cut, time band, about the USD value, about the geopolitical tensions, which they are not too much positive for the stock market. That's why we don't expect too much higher prices for the stock market. Even though the S&P 500 printed the new record high, and earlier today above 6,300. But still, the markets generally are the market participants are somehow cautious about the current level. So much cautious. Technically, we are still in option, but the fundamental data and cautious in the market can put the pressure slightly under pressure. On the other markets, as for the cryptocurrency market, these data could not be too much positive for the crypto market, couldn't be negative for the cryptocurrency market. Generally, the Bitcoin, after touching new record high around 123,000 US dollar now, it's the price trying to somehow find itself and make some ground for itself. And before any new trend up or down, the price would need to slightly stay stable around these levels. So that's why for the Bitcoin we expect some correction, but that's not be the correction. This correction wouldn't be the price trend changing, but it will be the correction after new highs that we had. Yeah, so that's the overall what's happening in the market and what's going on here. If you had any other question, please don't forget to write in the comment section. I'll try to get back to you as soon as I can. Have a good time. Bye-bye.